Alright, so something a little bit different in this video, which is going to be a bit of a longer form as opposed to a short. I'm going to show how you can buy options. In this specific instance, I'm doing a contract for a call option on Zoom video communications. The idea behind this comes, and again, this isn't something that is being either advertised, patronized, supported. It is just an idea that I saw, and I think it has some interesting potential to it. So, among other email lists that I follow is one called All-Star Charts. So these guys, JC Parrott, Steve Straza, they come up with this breakout multiplier thing, and one of their ideas is Zoom stock. They're saying that they believe, based off of their proprietary information system that they've created, that Zoom could be due for a bounce. They are looking at a September 20th call option. They're seeing that at the time when they created this, the option price was $1.41. We'll get to that in a second. They are seeing that they believe if at $60 it has strength, then it could bounce up. So they are looking for a $65 strike call. They're aiming for 100% return. Essentially, they'll want to double their money. So, but they are also okay with taking the loss. So again, I'm not telling you to do this or follow this, but I found it to be an interesting play. I can see the technicals for the bounce as well. And it's pretty interesting that just within this day that it has started to bounce a little bit after having a height and lower. All right, well, now it's going lower, which I am not, and then it goes higher. I have no idea what's up with this, but that's what happens with the market. You can never be 100% sure what's going to go on. This is a bit of a speculative play, and you've got to make sure that you are willing to accept a loss if it so happens. So, I use different trading platforms. For the sake of the options, I'm going to try the first one with public. Now, if you go to the description of my YouTube page, you will see that I have a link there. This is again, nothing of this is, am I getting compensation for? This is not a commercial for public or for All-Star Charts or for anything like that. If you do happen to use my link that I have in my description for my YouTube page, then yes, I probably get some sort of extra stock, I guess. And I'd appreciate if you found value and would like to do that, but you don't have to. This is a relatively new trading platform. Again, you could use Robinhood, Schwab, Fidelity, Chase, whichever one you have. The reason I had this one originally is because you've got to buy Shrek royalties, which is, interestingly enough, you get to buy and get essentially as a dividend payment on the royalty. That's not what we're here to talk about, but that's the reason that I found this to be interesting. You also get a high yield cash savings account, which I usually do that with treasuries that I buy on my own, but I found it to be interesting. And this little bit of Microsoft was free that I got when I signed up. So we are going to do an options trade. Go over there to trade, go to options. You see that it defaults to popular options. We have decided that we are going to do Zoom video. Basing it off of the information that we've got, we're going to go to September 20th expiration date. Now you see that up here you've got a lot of different options. You could go further, you could go earlier, but we are going to go with September 20th based off of this indication. Now, it is unfortunate, I saw this a little bit earlier today before making the video, and the options for $65, which are here in the center, they were going for, I think, $165. Now they're at $196. Makes me a little bit sad about doing it, but you've also got the option of going further and doing $70 calls, and you would be put back 90 cents. Now, what I'm not seeing here, which is a little bit unfortunate, I usually do this in another, well, I got back. I'm gonna try this again. Let's see if I can find it. All right. All right, let's just try it again. I was hoping I usually do this in another platform, which is Chase. And what I've done there is they give a lot more strike prices. So well, let's just do this because this is just an educational feature. Let me take a look at what this is going to give us. So this is some good, at least, research that you can do on your own, some education about the options. I could go through this, but I don't want to spend all the time doing that, at least in this video. This is just to give a quick overview of how to do it. You've got a few options. And I'm sorry that this is options, but it's, I guess, the best word that I can use. You can buy or sell. We're buying because we don't own any of Zoom stock in this account. We can go for a call or a put. Call is essentially saying that if the stock goes at or above whichever price you're looking at, which in the case we're looking for is 65, then we get the ability, but not the obligation, to buy the stock at that price. A put is essentially expecting the price of the stock to go down. That's why you can see the fluctuation in prices between those. The $60 put, you can see the break-evens, which is the good thing I like about this. It has to fall 5.74% in order for this trade to break even. In the call, it has to rise 11.2% in order to break even. Either way, you can do whatever you want. But this is anticipating, this strategy is anticipating that the price of the stock will go up. It will need to pass 66.96 at this moment, at least, in order to break even for the trade. And that's going, you have until now, until September 20th to initiate that. If we take a look back to one of these other screens, you can see that in August is the earnings date. That is probably going to be the best opportunity for this stock to either pop or drop, and we're going to hope that it will maintain some strength to at least reach that level. We can see a lot of different charts that have been following this, and with the tech moves, it is possible. But again, you need to define your own risk. So the reason why the $70 call or the $75 call or the $80 call are a lot cheaper is because even though you have the same amount of time to get to those different strike prices, you can see that the break-even rates skew significantly. So are you going to bet that the stock can rise 11.24% within this time? Or 17, 25, 33%? You're going to be spending less money. But the likelihoods of those events happening are fewer and fewer. If you want to go for a longer date, then you can see how the price change, because as you go further out in dates, the possibility of the stock rising in price, you have more time essentially to get to that rise in the price. So you can see that there's a huge disparity of $3.15 versus $1.95. So again, you have to also be aware of how this is going to happen. You could buy a share right now at $60.19. Man, this thing is going quick. I think that people are following this. Anyway, you've got volume of 102. That's the amount of contracts that essentially have been created today. Open interest, those are the number of contracts which are still essentially open, if I'm not mistaken. And you've got these other different types of Greek symbols and information, which I want to keep it simple. I honestly don't follow it either. So you've got what the current, or at least you've got this essentially the bid and the ask spread. So it has to fall somewhere in between there for the price of the option, but you can see that the last trade was at 199. I think a lot of people are trying to get into this. Otherwise, there wouldn't be such a huge disparity of the price. Let me just view this really quickly. Probably gives a little bit more, just an additional chart. Again, the stock is moving up today, which it still hasn't reached or breached an uptrend. It's still on the downtrend, but it is, it's there. You can see the expectations for the reporting. You can see the ratings. Most people are holding it. That means that they will hold it, but often they say Wall Street speak is to sell it, essentially. And 20% of a strong buy. You can see these other valuations. Again, this is an August 16 call option, which is significantly less because you don't have so much time. But it is an interesting strategy. I wouldn't choose it per se because, as we saw, the reporting date is August 20th. Let me see what another one is just before that, just out of curiosity. So you can see September 6th, pretty high. August 30th, pretty high. August 24th. As you can see, they've highlighted August 19th as the earnings. Alright, so this one says 142, so the page is a little bit outdated. Okay, let's go back to this because we've already decided this is purely for informational purposes. Now, when you're going to do this, the contract is for 100 shares. So if you were to buy 100 shares right now, again at the price of, let's just say 60, to keep it simple, of course, that would be 60 times 100, and you'd have to spend $6,000 to buy the shares outright. I'm sorry, that's a little light. Okay, that's light. Alright, well, 100 shares would be $6,000. With this, which right now is about $2, we're going to get it into a little bit less. But the shares, the contract is again for 100 shares. So 100 times 2, you'd only be spending $200. Now, the bad thing is that if this options play does not work out, this will effectively go to zero. Although you will have some time before that if you want to cash out. With the $6,000 offers, you still have the equity. You still have 100 shares. But you can see the amount of difference of money, one that you have to spend, 6,000 versus 200, and besides the fact that you could be taking the loss. So if this raises in price and goes beyond the 65 strike level that we are looking for, right? Again, to break even, it's saying that it has to go at least to 66.94. But let's just say that it is able to go to 70. Purely hypothetical number, just round number. The 70 minus the 66.94 will give you a grand total of $3.06. Multiply the contract by 100, you get, of course, $306. So $306 for the $200 that you are going to put into this presents an interesting risk-reward ratio. Of course, you have to be aware that you can lose the money. And if you're not comfortable with it, you shouldn't do it. And I have not done options very frequently. I do it when I see that there is an opportunity or an interesting risk-reward profile. And you want to be careful, because the way that the price option is right now, and again it's saying right now it's 193, it can fluctuate during the day. If I waited less, this price could go up, it could go down. I'm going to put it at 190, see if it gets filled at that level, and then I'm just going to cross my fingers and see what happens. Again, it's giving you the information. There's this order flow fee, but as you can see, I'm getting this rebate contract, which Public has. I don't know if it has it for everyone. I know that because I had signed up previously to when they were offering this, that they did give it, so it might be the case. Anyway, we're going to place the order knowing full well that this could go to zero if it doesn't pan out, or that I could have gotten it cheaper if I had waited, a few more days. The same way that it could go further in price if the stock moves up. My main concern about waiting is really the Fed decision, but I'm going to take a chance with what I see this. And again, it's educational purposes. So, there it is, order received. Let's go to the view order, see if it got filled. It is not yet filled, but I will keep you posted as to what happens. Come on, there we go. All right, so I'll probably do another follow-up on this eventually. And again, take a look at what you're doing. Always, okay, it says pending. All right, so it's limiting my buying power because it's pending. So take a look, see if this is something that you're interested in doing it. If there's something else you'd like me to talk about, or any specific stock, any specific strategy, a little bit more on this, let me know. Like and subscribe. Thanks for taking a look. And I'm going to also preface this because I know that it has been happening sometimes with the shorts, that there is a little bit of a disconnect between my speaking and the writing or the screen which shows up. I wish this app that I'm using for screen sharing would be a little bit better, but I don't have control about that. And I'm also annoyed about how Yahoo Finance changed this chart. I'm going to have to see if I can resolve that, but that is not your guys' problem. So thank you, like and subscribe, share, I'd appreciate it, and take a look again at my link in the description of my channel, which will give you, I believe, a free stock if you sign up and deposit money. It also could give me free stock, which I would appreciate if you liked this video. All right, everybody, good luck, and again, do this responsibly. This isn't investment advice. This is just for educational, entertainment purposes only. Bye.